Hello, welcome to the social trading webinar. If you're watching the recorded version of this, it was held live on Tuesday, the 17th of January at 7:30 in the evening. My name's David Jones, and I do this in conjunction with Ayondo Markets. So tonight we're going to talk about the idea of social trading / copy trading. Every week I do a market outlook webinar with Ayondo, and that's like a self-directed trading where you make your own decisions. But this evening we're talking about copying other traders. So that's really the theme for this evening's webinar. My background, I worked in the trading and the spread betting industry from sort of 2005 to 2013, and I still work in it sort of now and again, now doing consultancy and stuff. But I never really had that much exposure to copy trading because the companies I work for didn't really do it. But it's something I've got more into over the last 12 months, and that's what I'm going to talk about tonight. And the idea is really straightforward enough. Rather than sort of sitting there and picking the trades yourself, you're trying to pick what is in effect a team of hopefully consistently profitable traders where those trades get mimicked in your own account. But I'll talk a bit more about the nuts and bolts of how that works this evening. So we should run for about 30 minutes. Let's get into it. But before we do that, Ayondo are doing a trading competition. So I'm just going to run through that very quickly. So they're running a social trading championship. So I'll just talk about that for a couple of minutes. So the details should be on your screen now. So if you quite fancy your chances as someone who is consistently profitable, they're running this competition. So as a trader who other traders would follow, you get paid an element of commission anyway, but also there's this prize for who does the best performance, and this is the Ayondo Social Trading Championship. So you get paid if people follow you, but you can also win up to $250,000, which is worth a little bit more in pounds today than it was yesterday, thanks to the rally in the pound against the US dollar on the back of the Prime Minister Theresa May's talk today. So you can win up to £250,000. To find out more, if you go to next-trading-star.com, and you can see all of the details there. So that's Ayondo's Social Trading Championship. So if you go there, you can find out a bit more. But let's get back into tonight's webinar. So let's go back. We go back to the presentation, but most of it tonight, it's not on sitting here looking at slides. We'll actually look at some real people we can copy. So there's the risk warning. I think hopefully you've seen the risk warning for long enough there. So let's get on and look at the website. So what I'm going to do, we'll have a look on Ayondo's website. So the idea behind social trading, it is easy enough. You find a group of traders, and with Ayondo it's up to 5 traders, and you mimic their trades on your account, and this all happens automatically. So I first started exploring this, it's probably just under a year ago now, because I'd never really done it before. I've sort of traded on my own account since 1996, and I've used spread betting since about 1997. But this was like a really new idea for me to try and find people to copy and have their trades on your account. And the way you start, if you go to the Ayondo website, so I don't need an account to do this. You can start off with like a top level view of how various traders are performing. So these are a bunch of traders who make their track record visible to other traders, so to people like me and you, so we can see how well or how badly they've performed over recent months. So if we have a look at some of the top traders available, so there are a couple of ways of trading with Ayondo. You can just do normal spread betting and CFDs where you trade for yourself excuse me, and nobody sees how well or how badly you're doing. But if you choose to, you can make your track record available. So this is a list of people who have made it available. What I've done, I've sorted this by best performers over the last 6 months. So we've ranked them by their P&L, their percentage return, over the last 6 months. What I've also done is I've filtered out some traders. So I've clicked here RMT, and that means real money traders. So if you're trading on a demo account, so an account that isn't using real money, you can also make your track record available. But my view is, well, if I'm going to follow you with my real money, then I want you to be trading with real money as well. I don't really want to follow somebody who hasn't got the confidence to trade with their own money. They're just trading on demo accounts. So I filtered this down to RMT, real money traders, and you can see there are 205 top traders found. If I just click that off, you'll see I've suddenly got another 600 traders who've appeared. But all I care about is RMT, real money traders. So what I have here, sorry, the best performing traders with real money over the last 6 months. So at the top we have this chap here, Dax Finance. There's a picture of him there. The R next to his name means he's a real money trader. If he had a star next to his name, like OMP Trading, who we have featured, I think, on a few webinars in the past, that means the trader has a lot of followers. They're a popular trader. So Dax Finance isn't that popular just yet. There's a career level they can move through as well. So there are various criteria they have to meet with ayondo to progress along the career level. So those with maybe a slightly longer term track record will have moved a bit further along the career level. The risk score is all to do with volatility, but we'll have a look at all this in a bit more detail because we'll drill down into these numbers, into these sort of headline numbers, and find out a little bit more. But this is maybe the first important number. So over the last 6 months, what sort of return has this trader put in? So we can see Dax Finance has managed a 3-figure return, so has turned in 109%, just slightly less than 109% over the last 6 months. Now that is an impressive number. So this person has doubled their trading account in the past 6 months, which is great. But I think if you've ever done any trading yourself, you hopefully realise that there's a bit more to trading than just that. If you took a series of really wild trades, you could have the chance of doubling your account in a short period of time, or maybe losing it all. So I think the P&L, while it's encouraging that it's good, I think it's just one point to start with. The next column, I think, is maybe as important as the overall profit or loss, and this is the drawdown. So this is how much has that trader given back over the period, and the period we're looking at is the last 6 months, to achieve that return. Now Dax Finance has given back about 22% of his account. So if you were up £1,000 at some point over the last 6 months, it would have dipped back to being up only £800 over the last 6 months. So really it's almost a measure of volatility. It's all well and good making a great return, but if along the way you end up giving back 50, 60, 70%, as some of these traders do, of that return, that's probably not going to be a trader that you'll stick with. So for me, the balance between the profit achieved and how much was given back is a really critical one. And this is quite good, I think. This person, Dax Finance, has given back about 1/5 of their profits along the way in the pursuit of further gains. And I think that's for what is a more higher risk approach than investing, obviously, I think that's a reasonable balance between profits and drawdowns. If I just jump down 3, you'll see someone who, for me, that is not a reasonable balance at all. So Scotty77. So Scotty77 has made 38% over the last 6 months. That's a great return. So more than a third return of their capital. But to achieve that, Scotty77 gave back more than 80% along the way. To me, that sort of turns me off straight away following someone like that, because it suggests a level of volatility that doesn't really sit very well with me. Because I think, from my point of view, if I'm going to follow traders, if I'm looking to follow a group of traders, I'm trying to maybe smooth out the week-to-week volatility in the markets. Hopefully they're going to churn in regular, consistent returns without too much volatility. But with Scotty making 38%, but giving up 80% of the account or 80% of the gains along the way, and you can see it here in the chart, that's really not an approach that sits well with me. So this whole P&L to drawdown ratio, I think, is a really important one. So max drawdown, not too bad. Last trade was 6 hours ago, so a reasonably active trader. Trades per month, 50 a month, so what's that? A couple of trades a day. Number of followers, just over 280 followers. And there you can see the chart. It's a bit of a jaggedy old chart, but it's done reasonably, it's done reasonably. It looks to be a bit flat, maybe a bit inactive in recent weeks, but a trader with a fairly solid track record over the last 6 months at least. OMP Trading, this is one we've featured in the past. OMP Trading has been a really solid trader, has gone maybe a bit through the mill, I think, in recent weeks, and maybe the way the market has performed, maybe since the presidential rally, hasn't really worked well for OMP Trading. But you can see still up just over 50% over the last 6 months. Drawdown giving back more, I think, in recent weeks than OMP, he or she, had given back over the last 6 months, but drawdown of about 24%. Trades per month, much more active than DAX Finance, so trading something like 10 times a day. And there's the P&L chart. The chart for me, it is an important one. My background is technical analysis, so I approach the markets in a sort of from a chartist point of view. So for me, what I'm looking for ideally is a relatively smooth P&L chart. So if someone can sit there and just churn out a profit, if not month on month, then quarter on quarter, and we have a smooth P&L chart, then that's an ideal trader for me to follow. So OMP had been a star over recent months. It's come off the boil a little bit recently, but overall the trend is still up. So, which brings us to Scotty. So Scotty, first of all, the drawdown versus P&L is not attractive in the slightest, and the chart just looks horrendous. It looks like Scotty's had a good 6 months, but his longer term or her longer term trading performance really isn't one that gives me a lot of faith. Let's have a look a little bit lower down. DAX call 3, DAX call 2. I think that's probably the same person, maybe running slightly different strategies. Again, good return, 33% return, 12% drawdown, so ends up giving back a smaller chunk of profits than DAX Finance, but a nice chart. Who else have we got down here? And if you get a bit further down the list, some of the headline figures are still good. The sort of 6 month performance is still good, but you can see the drawdown figures really start creeping in. Let's have a look a bit longer term. Let's take a look at the last 12 months, and then we'll drill down into these traders in a bit more detail. Now, here's an interesting one. So TradeGoat, strange name, but TradeGoat over the last 12 months is the best performer. So P&L, 240%. That is a cracking return. Who wouldn't have wanted to increase their account 2.4 times over the last 12 months? But straight away we've got this warning sign. The drawdown is horrendous, an 88% drawdown. So if you had £1,000 account, maybe at its worst point, if you hit the drawdown at the worst point, your £1,000 account will be down to 120 quid. And it's just a horrible risk versus reward combination. So I think regardless of that headline figure, that's one I'd be very wary of following. Hectorius is one we've looked at in the past. Solid 12-month performance, 107% return. Drawdown okay, 19%, 20% drawdown. So again, about a fifth of the return. Again, has gone maybe slightly off the boil in recent months. So that's like a league table we can look at who's doing well, who's doing not so well. But let's have a look at DAX Finance. So DAX Finance, still the best performer over the last 12 months. So let's click on this person's name. And this is really where we get to put some meat on the bones. Now DAX looks like they've been a little bit inactive since Christmas time, but has picked it up a bit after Christmas, which is fair enough. We all need a bit of time off. But this is DAX Finance, and here's the performance. So so claims to have experienced more than 10 years performance. If we have a look here over, let's say, the last 3 months, what the performance has been like. So you can see a little bit of a dip at the start, so down 16% at the start, then seems to find a bit of a groove, and then has a good November, claws those losses back and a bit more, then a bit flat since then. But I'd still be maybe a little bit wary because we don't have, really anywhere near a long track record for DAX Finance. So it goes back to August last year. So we've got, what's that, about five months performance for DAX Finance. If we go back and have a look, and maybe somebody with a bit more of a track record, let's have a look at Edel Metal, who's been here for a while. There we go. So there's the last year for Edel Metal. So over the last 12 months, the return has been, what's that, about 76%. Going back to this time last year, so a really solid trend. Maybe lost it a little bit. Again, I think it is this US election. I think clearly this threw a lot of people. We did see some very strange market moves off the back of the US election, and then the markets in the last 5 weeks, US stock markets at least, have gone really quiet. So I think plenty of what had been previous top traders have found the last sort of 6 weeks to 2 months a little bit difficult. But looking at Edel Metal's performance, it's a solid long-term track record. If we scroll down, we can see a bit more information. So we have the stats here, the number of trades done, winning trades, 93% of trades have been winners. For me, that's always a little bit of a warning sign, because over the long term, it's quite rare for any strategy to be right 93% of the time. So maybe it does suggest a tendency to hang on to losing trades, maybe a little bit too long. But then if we have a look a bit more, 85% of months have been profitable months. Last trade was today, so an active trader. Real money trader since May 2016, so about an 8-month track record there. Maximum drawdown of about 23%. And it's this sort of information down here, I think, that does help you decide, is this a trader I want to follow? So if we look at the month-on-month performance, bear in mind this person has only been real money since May 2016. So some of their track record has been built up on a demo account. It's not all been real money. But back to December 2015, a 20% return on the month, which is a great return, but maybe a bit unrealistic to do that month in, month out. January 17, Feb 15, March, April, May, and you can see when the real money creeps in here, the returns drop, which is perfectly understandable, because I'm sure if you've ever traded on a demo account, you know it's a completely different mentality when it comes to trading with real money. But May 0.8, June 8.2, July 13.8, down just under 5% in August, up 13% in September, up a bit, 3% in October, down a whopping nearly 20% in November. That Trump rally sort of catching Edel on the hoof a bit, 0.6% in December, and so far this month up 2.7%. So it seems that Edel has maybe found the groove again after the odd moves we saw in markets in November. Then we see a breakdown of what do they trade, and you can see that the bulk of the trades, nearly 85% of trades, are done on the German 30, so the DAX index in Germany. Then how he gets performed, how the money's been made, where the monthly performance, so 8 months for more than 4%, 1 month 3 to 4%, 1 month 2 to 3%, and you can see a whole load of information there about where they've really made their money. So for me, the league table is a point to start at, and then it's about drilling down to find out a bit more information. But let's say you decide, well, actually, this is a person who I'd like to follow in my account. I think I'm following this one already, Edel, so let's just pick another one and click on following them, and I'll take you through the stages as to how you mimic their trades on your account. So let's pick on DAX Finance, because I don't think I'm following this person. So if I click on follow, here we go. Right, so what they've done, I was following 4 people already, and you can see that Edel, or Edel, is one of those. And there's Hectorius, there's OMP, and there's PsychonNet. And I just clicked to follow DAX Finance. So I added DAX Finance to the portfolio of traders that I follow. You can follow from 1 to 5 traders. I think 5 is a reasonable mix of people to follow. And then what it does, it will show you, okay, in an idealized world, if you'd been following these people over the last 12 months, this would have been their performance. If I went back, I would have made, over the last 12 months on my account, just over 106%, which is great. But unfortunately, we can't go back in time and follow these people from 12 months ago. So it's important to understand, again, it's an idealized view that we're getting here. But I think 5 is a good mix. I started doing this in, I think it was April, May last year. And if you register with ayondo, you can. I think you have a demo account for about 4 or 5 weeks. And I followed a bunch of people, not randomly, but I didn't give much thought to it because it was a demo account. And I think in the first month of following, I made just over 15%. And I thought, this is incredible. This is like free money. But I made that 15% with ridiculous levels of volatility because I was following some fairly volatile traders. And I think once you start doing it with real money, if you dial the volatility down, clearly the results, the returns suffer. But you want to try and smooth out, I think, that week-on-week volatility. It doesn't affect my own trading. I still trade spread bets and CFDs for my own account, but I think it's a really interesting way of gaining some exposure to the markets at maybe a reduced level of risk and trying to smooth out some of the bumps. So these are 5 people who I'd like to follow. So we've got these 5 traders here. So what I'm going to do, if I click on Execute on Live Account, so I click on that, it comes up with a warning first of all. So as these traders are all active, then they currently have trades that are running and trades that are open. So it says, well, do you want to follow their open trades? And for me, I always skip this because I've got no interest in following trades they've done already because the trade will be executed wherever the market is trading now. So if OMP Trading bought the pound yesterday when it was 300 points lower than where it is now, it will be done on my account at the prevailing market price, so 300 points higher than it was maybe when this person did it. So I've got no interest in doing that. So I skip that bit and click on Execute Portfolio. Okay, and there's another warning, I think, before it goes through. There we go. So it's all done now. So it's all set up. So I'm following these traders. I was following them before, and I deactivated it before I started tonight's webinar, just to close out all the trades. So I'm following these people. There's my account balance. So this is one account I use for these webinars with 445 quid in it. There's another level of loss protection that I can do. So I've got just under £450 in this account. What I can also do, if I click on this here, I can say, okay, I'm following these traders, and I've got £445 in my account. I can set a level. If my account balance falls to a certain level, close all trades and stop following these traders. So I can choose whatever I want. So if I choose £250 and then click on Save. So it's almost like having a stop loss on my account. Okay, so I know, well, that's the balance of my account. But if the balance of my account, including open trades, falls to that level, then please close out the open positions and stop following any new trades that they do. So that's one level of risk control. If I go back to who I'm following, there's another level of risk I can set. So if I go through individual traders, so if I click on the settings button here, so what it does, for each of the traders I'm following, I can determine basically how big I trade. So let's take Hectorius, for example. Let's say Hectorius does a trade where this trader risks losing 1% of his account on a trade. So this trader's got a £10,000 account, does a trade on the DAX. His stop loss is at a place where if it ends up being a losing trade, the loss will mean a 1% loss on his account, so £100 on his account. What I can choose to do is follow this person at the same size they're trading, so a 1% loss for this person means a 1% loss on my account. If my account's £1,000, the trade is scaled down. Or I can scale it up, so I'm trading at a level bigger than they're trading, like so. Or I can scale it all the way down and scale and trade and have their trade mimicked at half the size of my account. But there's another level of risk control built in. Because I'm following 5 traders, automatically my risk per trader is cut by a half. Let me just explain that. Let's go back to Hectorius. So Hectorius has got a £1,000 account. Sorry, a £10,000 account. Hectorius does a trade on the DAX with a stop loss. That means Hectorius is risking 1% of his account. So he or she is risking £100 on their account. Because I'm following 4 other traders, that risk is already split into a fifth. So if Hectorius is risking 1%, because I'm following 5 traders, that risk is cut on my account to 0.2%. So hopefully that makes sense. If I follow Hectorius 1-to-1, my effective risk factor, because I'm following 5, is reduced anyway to 0.2. So if I want to mimic this person, I need to knock that up anyway to 5 times to do the same size that person's doing. So it really is, you really can set the level of risk to 1 that you're comfortable with. So if I set that to 5 times, it now means if Hectorius risks 1%, I'm risking 1% as well, even though I'm following 4 other traders. So you can set that on a trader by trader basis. If there's one I'm not too sure of, let's say DAX Finance, because they've got a relatively short track record, I can dial that risk right down. So I'm going to trade half the size, but because I'm following 4 of the traders, my size is cut anyway. So I'm trading a 1/10 the size this person is trading at. So once that's all done, and they're all trading away happily on my account, the way it works, it is a little bit disconcerting in the beginning, I must admit. Even though for someone who's traded for maybe 20 years, it is a little bit odd when you see these trades going through on your account in real time that you've got absolutely nothing to do with. But you soon get used to it, and it's very easy just to look like we're looking here. No trades have gone through yet, but to check your account balance and check any open positions just by logging on in a browser. And what you're doing, in effect, you're trying to be a manager of good traders rather than sitting there and picking the trades yourself. So I hope that sort of makes sense. You're trying to find people who have a track record where they can deliver sort of consistent, profitable returns, maybe not week on week, and sometimes not month on month, but definitely the ones I aim for, definitely quarter on quarter, and smooth out maybe some of the bumps of what's going on in financial markets. I think it's a really complementary way of trading in addition to your own trading. If you're trading already, I think it's another way to gain access to markets with people who've got maybe a slightly different style to you. Or if you want some exposure to financial markets, and I think like a lot of people, you don't necessarily have the time to sit there and watch it yourself. It's another way of maybe being involved, but one step removed and smoothing out some of the volatility. So I think it's really interesting. I do think it's got a lot of legs. I think this whole idea of sort of copy social trading. There are a few companies who do it. I think that the big spread betting companies in the UK don't do it, and the 2 I've worked for, that's why I've never really had that much exposure to it. But I think the reason I like what ayondo does, I think it's a really simple interface. It's very easy to see who's doing well and who's doing not so well. So to come up with a list of people to follow, and their customer service and everything else is quite straightforward, and they're FCA regulated, all the usual stuff. So I think it's a really interesting way of dipping your toe into the whole social copy trading thing. And you can set the risk to a level that you're happy with. You can dial in a level of risk per trader. You can set this loss protection on your account, so you don't need to wake up one day and find that some trader's gone a little bit crazy and lost you a bucket load of money. You can dial in the level of risk that you feel comfortable with. And that's really it. It's no more complicated than that. So just to run through, some of the filters I use, and I think you can access this league table even if you don't have an account with ayondo. I look for real money traders, a smooth historical P&L. I don't want somebody who's lost money for 10 months and then just risked everything for 2 months and made a positive return. A healthy, that P&L to drawdown ratio, it's all well and good making 100% return in a year, but if along the way you've given up 80% of your profits, that's a level of volatility I don't want. So that translates into low volatility, and this detailed search lets you refine all of those. So I think it's a really interesting way, I think, of following a bunch of traders and seeing how they can perform for you. And that's it. That's really the end of the webinar. It's as straightforward as that. I think the thing to do, if you're interested, if you don't do it already, if you sign up, you can sign up for a demo and play around with it for about 3 or 4 weeks and see how you get on following other traders. I wrote a bit on my website. If you go to tradeafter.com, there's a little bit on my website there. I'll send you a link now for those of you who are here live. I wrote some stuff about some of my early experiences. This year, I've got this account I use for a demo. I've got another account with real money, well, with more real money in, that I use to follow traders. But I'm going to also blog a bit more this year about setting up an account with a couple of £1,000 in and following a bunch of people, and update it every month so people can see how it works. Because I do think it's a really interesting way of gaining exposure to markets. So I'll do a little bit more, I think, on social trading this year. But if you have any questions, drop me an email. My email address is david@tradeafter.com, and you can follow me on Twitter for general market updates and stuff during the day. But I hope you found it useful. I do genuinely think it's an interesting complement, I think, to your existing trading, if you're doing it already, or a way of hopefully trying to clock up regular profits without too much volatility. The normal risk warnings would apply. But for tonight, we'll draw a line under this. I'll let you get on with your evenings, and thanks for coming along, and we'll do this all again next month.